Kindly keep the applause going as we welcome our esteemed dignitaries, Mr. Manish, Singhal, Secretary General, ASSOCHAM, Mr. Ashishkumar Chauhan, MD and CEO, NSC Limited, Mr. Sundararaman Ramamurthy, MD and CEO, BSC Limited. Kindly keep the applause going, ladies and gentlemen. Ms. Nipa, Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Founder and Director, Trust Group. Ms. Aditi, Mittal, Co-Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Director, AK Group. Mr. Ravichandran, Executive Vice President and Chief Rating Officer, ICRA Ratings. Can we once again extend a very warm and hearty welcome to all our esteemed dignitaries. Ladies and gentlemen, we'll begin today's conference on an auspicious note. May I now request our dignitaries to kindly light the ceremonial lamp. A round of applause as we light the auspicious ceremonial lamp.
Saraswati Mahabhadra Mahamaya Varaprada Shri Prada Padma Nilaya Padmakshi Padma Bhakraka Shivanuja Pustakavrat Jnana Mudra Ramapara Kamarupa Mahavidya
I request the dignitaries to please come together for a group photograph. With this, we request our distinguished dignitaries to once again please take their seats on the stage. Ladies and gentlemen, as our token of appreciation and gesture of warmth, we will now present a planter to our distinguished chief guest. I request Mr. Manish Singhal to please formally welcome our chief guest with the planter. Our chief guest, Mr. Tuhin, Kanta, Pandey, Chairman, Securities and Exchange Board of India. Can we once again extend a very warm welcome? Thank you very much, sir, for gracing this event with your benign presence. Once again, a very good morning, ladies and gentlemen. On behalf of ASSOCHAM, I am pleased to welcome you all to the 16th Capital Market Conference. Our theme for today is Growth Catalyst for Viksit Bharat at the rate 2047, as it reflects India's journey towards a resilient and globally competitive economy with capital markets as its core. We are privileged to be joined by leading voices from regulators, industry stakeholders, and grateful to our partners and knowledge collaborators for their valued support. Let's begin today's proceedings with insight, purpose, and momentum. To set the tone for today's deliberations, it is my privilege to introduce our first speaker, Mr. Manish Singhal, Secretary General ASSOCHAM, brings with him over 3 decades of cross-sectoral experience, having served with leading industry bodies like FICCI and renowned corporates. At ASSOCHAM, he leads the Chamber's mission of driving economic growth and national development. Can we all please welcome him for the opening address?
Good morning, everyone. Warm welcome to you all the dignitaries on the dais. Of course, that is Mr. Tuhin Pandey, Chairman, SEBI, Mr. Ashishkumar Chauhan, MD and CEO, NSC, Mr. Sundararaman Ramamurthy, MD and CEO, BSC, Ms. Nipa, Sheth, Ms. Aditi, Mittal, and Mr. Ravichandran. Distinguished guests, it's a pleasure for me to welcome you all formally at this 16th Capital Market Conference. Today's theme, as already mentioned to you, is Growth catalyst for a Viksit Bharat that is at 2047. And as the title conveys, idea is to discuss role of capital markets in driving India's transformation into a developed nation by probably democratizing our capital markets to contribute towards nation building. Where does India stand today? We are the fourth largest stock market in the world. We recently surpassed Hong Kong. There is a rising retail investor confidence in the stock markets and hence participation. And yes, we do take pride in a lot of technology and innovation which has led to this growth. And of course, India attracts and probably is one of the most attractive destinations for the foreign portfolio investors. To just set the context for today's discussions, I would just leave you all to consider delving into 3 areas which are an opportunity towards the theme of the session today. First is we all know that our retail investor participation is still very largely concentrated in Tier 1 and Tier 2 cities. So maybe to achieve greater inclusion of smaller towns and rural economy in our capital markets, we can consider launching vernacular campaigns through colleges, panchayats, and self-help groups. Probably it's something akin to the way we have expanded the microfinance concept into these areas of our economy. Secondly, we have a large and unparalleled demographic dividend with 65% of our population below the age of 35. Now that's a huge aspirational segment of our society and our economy, which can be made aware of the capital market opportunities. But this probably has to start at the university level or even higher school level, so that by the time they are eligible to participate in the markets, they are well aware of it. I mean, probably a lot of us here, like I do, have been already trying to do our bit in teaching our children about what are the safe avenues to look at in the capital markets. And third, but not the least, was that we have a landscape of regulatory regime in our capital markets, which sometimes becomes a bit of a compliance burden for smaller companies and startups, and probably sometimes they hesitate to expand their capital base by using the capital markets. So just a suggestion I would like to leave SEBI chairman and the other dignitaries here is that we could look at a tiered or a risk-based regulatory approach that differentiates between startups, small entities, and the large corporates by way of fewer compliances or lesser frequency of compliances. Our knowledge paper, which we made along with ICRA, will talk of a lot of these things, and we'll be releasing it soon. And yeah, so that's where I would like to conclude that we are poised for a big transformation in the capital markets. We all have to contribute by making them more inclusive and of course democratizing the capital markets. The following few hours will be heavy discussions on capital markets, I am sure. So I'll leave you on a lighter note with a small tip on the markets. And that is that if you don't find a way to make money while you are asleep, you will keep on working till you die. This is not what I have said, but Warren Buffett had once said. Thank you all and have a good day.
Thank you, Mr. Singhal, for that inspiring start. Ladies and gentlemen, our next speaker is Ms. Nipa, Sheth, Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and founder and director, Trust Group. A chartered accountant and CFA, she transformed Trust Group from a debt distribution house into a full service investment bank. May I now invite Ms. Nipa Sheth to share her thematic perspective. Can we all please welcome her on the dais?
Good morning. Shri Tuhin Kanta Pandey ji, Chairman, Security and Exchange Board of India. Shri Ashishkumar Chauhan ji, MD and CEO, NSE, Shri Sundararaman Ramamurthy, MD, CEO, BSc, Shri Manish Singhal, Secretary General, ASSOCHAM, dignitary on the dais, and friends. Good morning. Everyone, welcome to the ASSOCHAM 16th Capital Market Conference in the theme Viksit Bharat 2047, Empowering Growth Through Capital Market in the Capital City. It is my privilege to guide you today through the discussion with our esteemed panelists and guests on the main financial pillars for achievement of Viksit Bharat 47. Equity capital markets, debt capital market, mutual funds, alternate funds, InvIT, REIT, and role of digitization and financial inclusion. Equity markets, as we all know, serve as the heartbeat of economic growth by the channelizing savings into the productive enterprises, while the market capitalization of US dollar 4.38 trillion in February 25 reflected the growing scale of our bourses. The democratizing the record 192.5 million demat accounts in financial year 25 underscored how equity is democratizing wealth creation across households. As we look towards Viksit Bharat 47, deepening equity markets through the broader listings, improved corporate governance, and enhanced investor protection will be vital for mobilizing long-term capital into sectors like manufacturing, infrastructure, technology, renewable energy, and thereby fueling the both enterprise growth and inclusive prosperity. Debt, as you all know, a well-developed corporate bond market is very important for the development of real assets. It reduces over-reliance on bank lending, diversifies investor base, and optimizes funding cost for issuer. As of 31st March 24, the outstanding value of corporate bonds stood at 47 trillion rupees, and the government security and the state government security stood at around 167 trillion. It is a reasonably big number for the size of our economy. Significant size of government securities highlights the government's efforts to bridge the fiscal deficits, manage public debt, and finance large-scale infrastructure and welfare projects. Concurrently, the robust growth in corporate bond market issuance indicates a shift towards more market-driven financing solutions. Corporate bond market has seen a growth of more than 15% over the last 5 years. However, it is fairly institutional. As compared to 19 crore plus investors, as per today, the debt market investors are not more than 2 lakh crore. We are hopeful with EBP, OBPP, platform, and AMC repo, the participation in the debt market will have a long way from here. For India to achieve its 2047 vision, it's imperative to strengthen credit rating mechanism, robust issuance process, improve market infrastructure, drive adoption of repo and DVP3. We need to ensure access of the debt market for all kind of investors on a real-time basis, thereby ensuring sustained financing for national building assets while safeguarding the financial stability. InvIT and REIT has of course come up as one of the very, very strong asset class and an investment vehicle for real estate as well as infrastructure sector. Both REIT and InvIT are designed to provide investor with an opportunity to participate in large-scale real estate or infrastructure projects while ensuring steady income and long-term growth potential with the growing demand of infrastructure development. REIT and InvIT have gained significant traction and have helped in unlocking capital for stakeholders. While we speak today, the total enterprise value of REIT and InvIT is close to 6 lakh crore, a significant jump in last 3 years. And while mutual funds sahi hai, alternative investment funds with their flexible structures and mandates bring much needed dynamism to Indian capital market. By close of 24, AIF commitments have reached 11.3 trillion, which is 3 times more than what we saw in 1920. By channeling the resources into areas such as startup, real estate, infrastructure, and distressed asset, AIF play a catalytic role in nurturing innovation and stimulating growth where traditional financing may be constrained. Looking ahead, refining AIF regulation to encourage greater transparency, risk management, and best practices, and cross-border fund flow will empower fund managers to mobilize sophisticated capital, spurring entrepreneurial venues and large-scale projects that underpin our Viksit Bharat. And last but not the least, digitization and financial inclusion. Digital infrastructure in transforming how capital market operate. In April 25 alone, we have seen UPI transaction worth 23.95 lakh crore and 17.89 billion transaction. demonstrating remarkable scale and resilience, which is coupled with 192 million demat accounts. Those figures highlight how technology is democratizing access, reduction transaction cost, and turbocharging the capital market participation. Investing in robust digital platforms, open AI, cybersecurity will ensure our markets remain agile, inclusive, and globally competitive as we move towards 2047. India is one of the 5 largest economy in the world as GDP and also as the market capitalization. We have more than 20 crore investors and we've just begun our journey. Today we have a privilege to have the SEBI chairperson and MD and CEO of both exchanges who will play the helm at paving way of capital markets for Viksit Bharat. I look forward for a very enriching session. Thank you very much.
Thank you, Ms. Sheth, for your thoughtful insights. I'll now take the opportunity to introduce Mr. Sundararaman Ramamurthy, MD and CEO, BSE Limited. He is a seasoned professional with over 3 decades of leadership across banking and exchanges. Formerly with Bank of America and NSC, he has been instrumental in steering BSE's transformation and innovation. He was recently honored as Outstanding CEO of the Year in Capital Market 2023 and Asia Business Leader of the Year 2023. Ladies and gentlemen, please join me in welcoming Mr. Sundararaman Ramamurthy to deliver his address.
Distinguished Chairman of our regulator, Securities and Exchange Board of India, my senior Shri Ashishkumar Chauhan ji, and other distinguished dignitaries on the dais, and all the assembled friends here. Pranam, Namaskar, and good morning. World over, shares were born first, typically. After that, a few dealers in shares. And then they called themselves as share brokers. They started regulating themselves. And then a regulator came and regulations started flourishing. India went through the same way. 1992, we had the birth of the capital market regulator. But in this journey of shares to a regulated market, the purpose for which a stock exchange exists has considerably changed. From the initial limited purpose of people who congregated wanting to buy and sell their scripts and then to other scripts, over a period of time, the agenda has become national and developmental. Today, with progressive policy formulations and a co-created regulatory process, the role of a stock exchange is much broader. It is about capital creation, liquidity creation, democratization of access to information, democratization of access to markets, transparency, risk mitigation, resulting in all economic development, employment generation, investor protection, and overall building trust. The regulatory process aiding this is very evident by numbers. If you take the last 30 years, maybe 25 years, 30 years, our GDP has grown from 103 lakh crores to 324 lakh crores, roughly 32 times. During this time, the market cap has grown from 3.6 lakh crores to 425 lakh crores, 118 times. The number of investors in the markets have grown by more than 100 times. The market cap to GDP growth rate, the percentage has grown from 35% to 145%. That shows the importance of a regulated market. If we are working towards Viksit Bharat, where we are expecting the economic growth to go to 30 trillion, 35 trillion, considering the ratios, considering the past, if we have to look at it, that means the market cap has to grow in a very, very significant way. That means the exchanges have a very, very big role in Viksit Bharat. We can talk for hours on what all we could do. Time is short. Let us take a few areas what we should all probably jointly look into. The importance of demographic dividend was talked about just few minutes before. The Honorable Finance Minister in her budget speech talked about Gyan, Garib, Yuva, Annadata and Nari. Yuva and Nari. The role of youth and women is becoming more and more important. How do we shape the youth to get into capital markets through probably a time-tested mutual fund, large cap or index fund type of an investment is going to be very important. Passive investments in developed nations are a significant portion of households' financial holding. We are quite a distance away. We need to do a lot together in encouraging Yuva Shakti to get into this area. Yuva and Nari put together contribute for a significant portion of our population, and just 20% of the women are working outside their homes. There is a significant amount of workforce which is available for us with their typical balance of mind to contribute to the development of economy. This is on one side. On the other side, we have around 1.5 million engineers coming out of the colleges every year. Do we think all of them will be able to be provided jobs? If so, where? If not, how do they self-start? How do we help in skill development? And how do we help people who are developing skills to create jobs for others by having startups? This is another area where probably exchanges and bodies like you should work together in skill development and skilled people becoming entrepreneurs. And those entrepreneurs getting a lot of help to set up their establishments. Third, Pravasi Bharatiya Nagarik, non-resident Indian. There are around 16 million NRIs, I am told. And India is one of those countries which gets maximum amount of repatriation. But just 15% of their income is coming to us. Can we have a bigger pie of the remaining 85%? That is another area which we should look at. Last but not the least, is which typically I talk everywhere. There are 6 crore SMEs in this country. Hardly 1,000 have been listed. Why not even 6,000? But for every few SMEs coming in, one problematic SME also comes, which dampens the spirit. What we should do, all of us together collectively, to bring in quality SMEs to the market. This would be very important in improving the market capitalization, helping the economy grow, generate employment, and create exports. These are some of the areas which I thought we should talk about here. When we bring in all these people, two things come to my mind. One is investor awareness creation, so that right investors go to the right product. BSE alone does around 14,000, 15,000 programs every year, covering 8 lakh people. If you combine it with NSE, it will be a very, very, very large number. While it looks large, it is still insufficient. While we do all that, the investors should also be taught they need to protect themselves. Apart from all the protection we provide, then only it will work. That is one another important area. Also, we should have more products. People talked about debt markets. We should try to find a way whereby instead of people just looking at equity and equity derivatives, how do they get into government bonds? Should not every Indian be proud to hold at least one bond of Government of India as his contribution to Viksit Bharat? How as a marketplace we can help? These are some of the thoughts. I have not given solutions here. That's for all of us to join together and work. Thanks ASSOCHAM for this opportunity, and thanks for patiently listening to me.
Thank you, Mr. Ramamurthy, for that engaging address. Ladies and gentlemen, it is now time for the formal release of the ASSOCHAM ICRA Limited Knowledge Report, which encapsulates key trends, challenges, and actionable recommendation for accelerating market development. This report is prepared by ASSOCHAM in association with our knowledge partner, ICRA Limited. May I now request our chief guest, along with other esteemed dignitaries, to kindly unveil the report. Ladies and gentlemen, with this we unveil the knowledge report. Can we have a round of applause? Kindly keep the applause going. ASSOCHAM ICRA Limited, a knowledge report. Thank you very much, dignitaries, for doing the honors. To present the key highlights of the knowledge report, we have with us Mr. K. Ravichandran, Executive Vice President and Chief Rating Officer, ICRA Limited, with nearly 30 years of experience, including 27 years at ICRA. Mr. Ravichandran heads their analytical team across corporate, financial, and structured finance sectors. A respected voice in credit markets, he regularly contributes to media and conferences. May I now invite Mr. K. Ravichandran to share his perspective. Let's all please welcome him on the dais.
Respected SEBI Chairman, Mr. Chauhan, Mr. Ramamurthy, Mrs. Mittal, Mr. Sheth, and distinguished participants. It's our honor to be the knowledge partner for this important event. Our team has put out an excellent report encompassing the entire gamut of capital markets, whether it is debt, equity, derivatives, commodities, InvITs, REITs, and so on and so forth. We have seen the evolution of the capital markets over the last few years. Especially post-COVID, there has been a dramatic shift in the way equity capital market has functioned. Perhaps people had more time during the COVID time and they experimented with various trading apps and so on and so forth, and they got interest in the equity market. And today, the number of retail investors has exploded, so much so that regulator had to come in and stop the buoyancy in the sector through certain controls. Especially on the F&O market, there has been frenzied activity. Perhaps intervention was required. Otherwise, there could have been systemic issues. Barring that, the money raised through the IPO has been the hallmark of last few years. As per our estimates, almost 13 lakh crore worth of money was raised through IPO of which almost 50% came from rights issue and public issue, and balance 50% from QIP and qualified QIP and preferential allotment and so on and so forth. And more importantly, if you look at the all-time high equity issuances, large IPOs, 7 of the top 10 IPOs happened during the last 5 years. That shows the extent of interest and development of our equity capital market. If you also look at other reasons as to why this market has developed so much, I would also think a lot of the procedural simplifications have played an important role. Ease of doing business guidelines have really helped. Listing timelines have been compressed quite a bit these days. Settlement cycles, have been, brought to almost zero. And if you trade today, tomorrow you're getting the money in your bank account. That is quite, unthinkable. In the last, 10 years back or 20 years back. So our settlement cycles are fairly robust and one of the best in the world. And otherwise, the debt side also, a lot of interventions happened from the government side. While we have had our own accident during the COVID period when one of the large mutual fund had to stop redemption. But since then, there has been a slew of measures which has simplified and improve the safety of the investors. I would think the backstop facility especially is really helpful, whenever there is any big accident in the debt market. So that fund has been set up and mutual funds have contributed, and I'm sure this will help in the long run. And even on the debt side also, if we were to see, capital raised was about 11 lakh crore in the last financial year. Which saw almost 100% growth over the if you look at the previous 5 years, fundraising activity. While one can talk a lot about the corporate bond market, the issues remain the same, especially the fact that the people who are able to raise capital, they're largely AAA and AA rated companies, and within that, financial sector and PSUs, they've been dominating. Manufacturing sector presence is very limited. And the companies who are in BBB and A category have largely been non-existent in this market. That is where more work needs to be done. And the recent past, there have been certain developments, especially AIF, they have been investing in these papers. The emergence of family offices and ultra HNI and HNIs, they also played an important role in the evolution of the high yield market. And it's a matter of time before this market explodes in the long run. Along with that, I also wanted to highlight the securitization market, both PTCs, pass-through certificates and direct assignments. Pass-through certificates issuance volumes have picked up across asset classes, whether it is the gold loans or mortgages or commercial vehicles, cars, and so on and so forth. There's good amount of demand from the investors. Of course, long-term money is not really coming in, especially from the insurance companies. That is where the recent initiative by RMBS Development Corporation would be an important development, wherein they would be structuring the MBS and which will be placed with the large insurance companies. Hopefully, this RMBS market will be a happening market in the future, which will enable the housing finance companies to raise long-term sources of funding at competitive rates, which will enable them to grow their book and cater to the mortgage needs of the economy. That apart, mutual funds also played a big role in the recent past. The number of SIPs being the talk of the town. More importantly, the investors have a lot of maturity in recent times. Unlike the earlier era, whenever there was a big drawdown, people were redeeming. Today, while even today also, while you are finding some redemption, but not anywhere closer to the earlier era. So maturity level shown by the investors has been quite redeeming. I am sure that would enable us to leapfrog on the AUM side and both on the equity side as well as debt side, and a lot of hybrid schemes are also in the market. All that would help both debt market and equity market. I also want to briefly touch upon the InvITs and the REITs, which have really helped the stressed developers to recycle capital and reduce their leverage levels. More than 24 InvITs have been in the market, and they've been able to raise capital from sovereign wealth funds, large pension funds globally, and so on and so forth. But unfortunately, the retail interest in the InvITs is relatively thin, and that is where a lot of work needs to be done. While a fund based in Canada and US and Singapore are able to appreciate the nuances of InvITs, Indian retail investors, perhaps they are not able to appreciate it very well. That is where more investor education would be required, and I'm sure with the help of the regulators and exchanges and so on and so forth, we'll be able to do that effectively. And while we may have certain, on the economy front, while we may have certain headwinds, especially with all the tariff related and other aspects, but I'm sure we'll be able to come out of this hump, and Indian GDP growth story will be quite attractive for the global markets to appreciate and bring in equity capital. Unless we have a vibrant equity capital market and debt capital market, we will not be able to achieve the status of a developed country. I'm sure with all the collective support of government and regulators and exchanges and the media and rating agencies, etc., I'm sure we'll have a vibrant market and we'll be able to achieve the developed country status by 2047. Thank you for your patient hearing.
Thank you, Mr. Ravichandran, for that comprehensive overview. Ladies and gentlemen, if you wish to get the soft copy of the knowledge report, then you can scan the QR code which is kept at the registration desk. And now it is my privilege to introduce our visionary leader, Mr. Ashishkumar Chauhan, MD and CEO, National Stock Exchange of India. He is a technocrat from IIT Bombay and IIM Calcutta. He was part of the founding team at NSE. He has pioneered key developments including screen-based trading, derivatives markets, and the Nifty index. His illustrious career includes leadership at BSE and Reliance Group, and he has received numerous national and global awards. Please join me in welcoming Mr. Ashishkumar Chauhan to share his industry perspective.
Respected Chairman, Securities and Exchange Board of India, Shri Tuhin Kanta Pandey ji, Shri Manish, Singhal ji, Secretary General ASSOCHAM, Shri Sundararaman Ramamurthy ji, MD and CEO BSE, Sushri Nipa Sheth ji, Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Founder, Director, Trust Group, Shri Ravichandran ji, Executive Vice President and Chief Rating Officer, ICRA Ratings Limited, Sushri Aditi Mittal, Co-Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Director, AK Group, senior officials from SEBI, officials and members of ASSOCHAM, leaders from capital market institutions, media personnel, distinguished guests, ladies and gentlemen, members of our brave armed forces. First, let me appreciate and thank profusely the brave officers of armed services, especially during last few weeks in protecting the country. We are proud of you. We are with you. Stock market, wealth creation, economic activities to thrive require a terror-free society. And our armed forces have time and again proved their mettle and their valor and provided great service to the nation for keeping us all safe. So thank you once again. Let's give them a big hand. It's a privilege to address the 16th Capital Market Conference on Growth Catalyst for Viksit Bharat 2047. It reflects the critical role capital markets and its shareholders play in creating a virtuous cycle of economic growth, capital formation, wealth creation, job creation, and many more. As India charts its path towards becoming a developed economy by 2047, vibrant and inclusive capital markets will be central to mobilizing resources and supporting the financial well-being of the people of India. For over a century, ASSOCHAM has stood as a pillar of knowledge and advocacy, fostering dialogue, generating impactful insights, and bridging the gap between industry and policymakers. Your relentless efforts in promoting a robust, inclusive, and forward-looking economy are truly remarkable. This conference is yet another testament to your unwavering commitment to India's progress, bringing together stakeholders to deliberate on the pivotal role of capital markets in realizing Honorable Prime Minister Shri Narendra Modi's vision of a Viksit Bharat by 2047. India today shines as a beacon of stability and opportunity in the global economy. While the world faces challenges such as escalating trade tensions, slowing growth in advanced economies, and geopolitical risks leading to economic fragmentation, India's growth story remains strong. The IMF projects global growth to ease from 3.3% in 24 to 2.8% in 25, with a modest recovery to 3% in 26. In this context, India stands out as one of the fastest growing major economies, with GDP growth projected at 6.3% up to 27 each year. These figures reflect more than a cyclical rebound. They highlight the depth, resilience, and dynamism that characterize India's ongoing economic journey. India is set to surpass Japan in 25 to become the world's fourth largest economy, rising from the 13th place at the start of this century. According to the IMF, it is on track to cross $5 trillion GDP by 27 and emerge as the third largest economy by 28. This growth is not episodic but structural, driven by a combination of strong domestic consumption, rapid formalization of the economy, extensive digital public infrastructure, and a young, aspirational population with a median age of just 28 years, among the youngest globally. India has already signed a trade deal with UK and is on course to make deals with other countries, including the US. India's equitable capital markets have mirrored the strength and growth of the broader economy, reflecting the country's evolving economic landscape. Today, India ranks as the fourth largest equity market globally, trailing only the US, China, including Hong Kong. Many times, Manish, we have been given a fiction that Hong Kong is a separate country. It is not. In Japan, India's market capitalization has grown over 120 times in 30 years since NSE started operations in 94. It stands today at about 440 lakh crore rupees, or $5.1 trillion. The market capitalization of NSE-listed companies increased nearly sixfold in last 11 years since the new government of Mr. Modi took over in 2014. On similar lines, the market capitalization to GDP ratio has more than doubled from 60% in financial year 14 to now 124% in financial year 25. This is a remarkable achievement considering no other country in the per capita income range of $2,500 to $15,000 boasts of a comparable market size. The market capitalization of Indian equities now stands at nearly 1.6 times the size of India's banking sector, underscoring the growing significance of capital markets as a key driver of economic expansion. The Nifty 50 index, which completed 29 years in April 25, has delivered a long-term compounded returns of 11.8% in rupee terms and 8.5% in dollar terms in 29 years, outperforming global benchmarks like the S&P 500 of 7.6% compounded returns in last 29 years, and gold at 7.7% in dollar terms. So many times I say that US required Warren Buffett, India requires Nifty. In the past 3 decades, NSE has been at the forefront of transforming the capital markets in India, enabling a fair, efficient, and transparent market. India has been leading several first-of-its-kind initiatives in the capital markets worldwide. Many of the pioneering initiatives in Indian financial markets were conceived and commenced at NSE. NSE was India's first digital public infrastructure and first and till date the largest fintech electronic screen-based trading, started in 1994. The satellite-based connectivity put up by NSE was a decades before Indians saw nationwide online banking. Dematerialized trading, centralized clearing, and real-time risk management were in place by the year 2000. Derivatives and ETFs in the next 2 years and settlement cycles dropped continuously thereafter. At the core of NSE's operations today is cutting-edge technology. Our advanced trading platforms process over 2,000 crore orders, that is 20 billion orders, and 28.5 crore or 285 million trades on some of the days of 6 hours and 15 minutes. The growth of the markets is a shared success with our investors, with our listed companies, with our regulators, our members, and all market participants. SEBI's 3 goals of investor protection, market regulation, and market development have been the guiding light of Indian equity markets over these years. Under SEBI's leadership, our capital markets have evolved from a nascent framework in the 1990s to a global powerhouse today. Under the leadership of Chairman Sir, SEBI is further streamlining processes, enhancing ease of doing business, and inspiring confidence among all our stakeholders. Capital raising is a critical driver of economic growth, enabling businesses to invest, expand, and create jobs while deepening the financial system. NSE has played a pivotal role in this growth. During financial year 22 to 25, total capital raised across markets exceeded rupees 60 lakh crore from NSE alone. If you add BSE, it will be even more, which was nearly double the net increase in outstanding bank credit to industry and services sector during the same period. That stood at 32.3 lakh crore. In 25 alone, NSE enabled a total capital raising of 18.7 lakh crore through equity, business trusts, and debt, a 35% year-on-year increase over a year ago. Further, NSE was a global leader in IPO fundraising in calendar year 24, having raised about 1.67 lakh crore or $19.5 billion through 268 IPOs, which was among the highest raised by any exchange in the world. And this is in contrast to Singapore and UK losing listed companies for last 20 years year on year. Looking ahead, India's vast and dynamic ecosystem presents immense opportunities with over 6 crore MSMEs, along with more than 125,000 startups and 130 unicorns. The potential for market listings is substantial. To sustain investor trust, it is essential to attract high-quality companies with the transparent disclosures, robust financials, and strong corporate governance, ensuring the market's depth, resilience, and long-term appeal. India's capital markets have transformed into a powerful engine for household wealth creation, underpinned by rising investor participation and robust regulatory safeguards. Small investors from Dibrugarh to Jorhat, or from Ladakh to Andaman Nicobar, now confidently invest in companies located far away in Salem or Rajkot, trusting the integrity of the system. NSE's unique investor base now stands at 11.3 crore, with investor accounts surpassing 22 crores, spanning 99.9% of India's PIN codes, barring only 28 of them. 28 PIN codes today do not have NSE investor, and most of them are airports where you can't do KYC, most of which are due to the e-KYC and video-based KYC that SEBI introduced during COVID time. This growth has been remarkably rapid. The last 2 crore addition came within just 5 to 7 months each. Beyond the numbers, the demographic profile of investors is also evolving. The median investor age has declined to 32 years, and women now account for 1/4 or 25% of all investors. Today, 1 in 5 Indian households has a direct exposure to stock markets compared to 1 in just 15 5 years ago. That also shows that India is becoming increasingly middle class. Individual investors have now become central to India's capital markets with their ownership, direct and via mutual fund, in NSE-listed companies, rising from 10.9% in financial year 14 when Mr. Modi took over to 18.2% in financial year 25, overtaking FPI ownership for the first time since 2006. The rise in investor participation has driven substantial wealth creation, with estimates suggesting that rupees 46 lakh crores has been added to household equity wealth during last 5 years from financial year 21 to financial year 25. This behavioral shift is mirrored in mutual fund participation as well, with SIPs becoming a popular route for long-term investing. As of March 25, SIP AUM accounted for nearly 20% of the mutual fund industry's 65.7 lakh crore AUM, with average monthly SIP flows rising from 3,660 crores in financial year 17 to now 24,130 crores in financial year 25. DIIs have been consistent buyers of Indian equities, recording the highest ever inflows of rupees 6.1 lakh crore in financial year 25. This growing domestic participation has helped offset FPI outflows and made Indian markets more resilient and self-reliant. Investor protection remains a priority with strong safety net of 2,459 crore of investor protection fund at NSE alone and rupees 12,083 crore of settlement guarantee fund with the National Clearing Limited. Investor education efforts have scaled up significantly with 14,679 awareness program conducted by NSE in financial year 25. If you add 14,000 plus done by BSE, it's almost close to 30,000 total, along with wide-ranging digital and media campaigns. As India enters the Amrit Kal, the next 22 years present a unique opportunity to realize sustained and inclusive growth. We begin this journey with core prerequisites firmly in place: a large domestic market, a youthful demographic bulge, and resilient institutions with democratic legitimacy. Technology now, with its AI wave, is accelerating wealth creation faster than ever. The aspiration to become a developed nation by 2047 hinges not merely on reaching income thresholds as per World Bank standards, but on fostering inclusive prosperity, catalyzing innovation, and deepening global integration. India is no longer merely a bright spot in the global economy. We are becoming the growth engine for the world. Our capital markets, with robust regulations and rising retail debt, will serve as a backbone of capital formation to fund the next phase of India's growth. And NSE will be in the middle of it. By working together, regulators, exchanges, investors, intermediaries, corporates, and industry bodies such as ASSOCHAM, we can build a robust and resilient market ecosystem that will position India as a global economic leader by 2047 and contribute to the vision of Viksit Bharat 2047 as given by our Honorable Prime Minister, Shri Narendra Modi ji. Thank you. Jai Hind.
Thank you, Mr. Chauhan, for that thought-provoking address. Ladies and gentlemen, we are deeply honored to have with us our chief guest, a stalwart of public policy and economic reform, Chairman, Securities and Exchange Board of India, Mr. Tuhin Kanta Pandey, an IAS officer of Odisha cadre belonging to 1987 batch. He has held top roles across several key ministries, including finance, commerce, and public enterprises. As the former Union Finance Secretary, he played a pivotal role in India's economic and capital market reforms. Please join me in welcoming our chief guest, Mr. Tuhin Kanta Pandey, to address the gathering.
Distinguished industry leaders, partners in national building, and esteemed guests, a very good morning to you all. Before I come to this subject, which is very important subject, capital markets, both debt and equity, let me remind ourselves we all owe a big debt, a debt to our armed forces, and we bow our head in gratitude, all of us. Please thank them with a round of applause. Unless we are secure, our economy cannot grow. It's an honor to be here today and share my thoughts on the key growth enablers that can propel India towards the ambitious yet achievable vision of becoming a Viksit Bharat, a developed nation by 2047. As we stand at this pivotal juncture in our economic journey, it's clear that India's transformation will be powered by a convergence of long-term investments, infrastructure expansion, technological innovation, and deep institutional reforms. The government's commitment to building world-class infrastructure, improving ease of doing business, and unleashing entrepreneurial energy has already begun to redefine the contours of our economy. Digital transformation, the emergence of AI, and the strengthening of digital public infrastructure are unlocking efficiencies and inclusion on an unprecedented scale. These developments, combined with strong macroeconomic fundamentals, policy stability, resilient financial market ecosystem, are creating an enabling environment for sustained capital formation and productivity-led growth. While India's banking system continues to play a vital role in credit intermediation, it alone cannot meet the vast and long-term capital requirements of a rapidly growing economy. The scale of investment needed to fund infrastructure, clean energy, innovation, and industrial expansion demands diverse and sustainable sources of financing. Capital markets bridge this gap by offering a platform for equity and debt financing, enabling businesses to access patient capital without over-reliance on debt or collateral. How are the capital markets fueling India's development? Well, the Indian securities market is not merely a facilitator of financial transactions, but a powerful engine of capital formation. Our capital markets have become an essential channel through which domestic savings and foreign investments are directed into productive economic activity. This is helping fuel innovation, entrepreneurship, job creation, and infrastructure development. And the Indian capital market has seen remarkable growth over the past few years. At the cost of repetition, many previous speakers have spoken about a lot of statistics. I would also like to focus on some of them, just to give you the size of the Indian security markets today and what role they can play. Over the past 10 years, around 93 lakh crore has been raised from the capital market through both equity and debt issuances, supporting growth across sectors. Our market has facilitated average equity issuance of around 2.2 lakh crore per annum over the past decade, supporting business expansion and innovation. FY25 marked a record year with 1.7 lakh crore raised through 320 IPOs, the highest number ever, underscoring the growing depth and vibrancy of our equity markets. Market capitalization of listed companies has risen from around 150 lakh crore at the end of FY19 to rupees 423 lakh crore as at the end of April 2025, reflecting strong investor confidence and robust corporate performance. Average daily trading volume have grown significantly from rupees 35,000 crore in FY19 to over 1 lakh crore now, indicating deeper liquidity and broader participation. And let's look at the investor participation itself. The number of unique investors in security market ecosystem has almost tripled since March 2019 to reach over 13 crore now. Of course, demat accounts are much larger, over 19 crores, but unique investors are over 13 crore, signaling the growing trust of retail investors in capital markets. However, there is still a huge potential to expand further. If you just compare the US market and Indian market, the level of retail participation in India is still much lower than US. And in many respects, we are sort of following the dynamism of US markets. India's population is predominantly young, aspirational, and increasingly financially aware. This demographic dividend presents a unique opportunity to deepen and broaden our capital markets. As per industry estimates, around 1/3 of Gen Z investors are already participating in the securities market, an encouraging sign of growing financial engagement at an early age. This trend reflects not only the rising trust in formal financial systems, but also signals a significant opportunity for long-term wealth creation and inclusive participation in the nation's economic progress. Assets under management. The retail participation in securities market is further reinforced by the growth in mutual fund industry, with asset fund under management increasing from 24 lakh crore at the end of March 2019 to 70 lakh crore as of end of April 2025. Mutual fund SIP flows have been seen steady growth over the years, with annual contributions rising from less than 1 lakh crore in FY19 to 2.9 lakh crore in FY25. As a result, SIP AUM has expanded nearly fivefold, that is from 2.7 lakh crore in March 19 to 14 lakh crore as at end April 2025. Alternative investment funds are playing an increasingly important role in India's journey towards becoming a Viksit Bharat by channelizing long-term capital into high-impact areas such as startups, infrastructure, innovation, and emerging sectors. AIFs are helping to bridge critical funding gaps that traditional sources may not fully address. They support risk-taking, promote entrepreneurship, and enable the development of future-ready sectors, which are the key drivers of a developed economy. The significant growth in AIF investments from 1.1 lakh crore as of March 19 to 5.4 lakh crore as of March 2025, which is 5 times, reflects the growing relevance and potential to catalyze sustainable, inclusive economic growth in the decades ahead. Portfolio management services, PMS, which facilitate long-term investments, have seen their assets under management grow from 2.8 lakh crore in FY19 to 7.2 lakh crore in FY25. We are also witnessing the increasing importance of new investment vehicles such as REITs and InvITs. My previous speakers have also said it before, which are gaining traction and have the potential to significantly support infrastructure and real estate development. These instruments offer long-term investors access to stable income streams while providing infrastructure developers a means to recycle capital and fund new projects, thereby accelerating India's core sector growth. At present, we have 6 REITs and 26 InvITs registered with SEBI, signifying the potential to mobilize long-term capital. REITs and InvITs have mobilized 1.5 lakh crore over the last 5 years. Let me come to the foreign investments, FPIs. As regards foreign investment, the long-term trend of foreign portfolio investments in India remains strong. The equity assets under custody of FPI has increased from 21 lakh crore in FY15 to 69 lakh crore as at end April 25, representing around 17% ownership in Indian listed companies. Reinforcing sustained global confidence in India's growth story, India's share in the MSCI Emerging Market Index has risen significantly from less than 9% a decade back to 19.2% as at end of April 25, highlighting the country's growing weight in global portfolios. What's the SEBI's role in enabling how do we enable markets? And I think at SEBI we recognize that for capital markets to remain a driver of growth, we must continue to foster trust, innovation, and accessibility. Our focus remains on promoting ease of doing business in the securities market through regulatory simplification, faster approvals, and technology-driven oversight. We are committed to a framework of optimum regulation, one that ensures investor protection while allowing businesses to innovate and thrive. Some of the building blocks. SEBI has taken various measures to create building blocks to facilitate capital formation and prepare the market ecosystem which is resilient and future ready. Some of these measures are reduction in timeline of shares in public issue from 3.6 to 3.3 working days. Fast tracking of the right issue process, easing on the onboarding process of FPIs, introduction of MF Lite framework, upstreaming of clients' funds to CCs, that means clearing corporations, to ensure client funds are protected, strengthening the governance of MIIs, two of the leading MIIs, their heads are sitting over here, strengthening of corporate governance for listed companies, and that's very important too. SEBI remains committed to fostering innovation and expanding the product landscape to support the dynamic needs of a growing economy. In this direction, the recent initiative includes granting in-principle approval for electricity derivatives, a potential tool to hedge against the volatility in energy sector. Further, to provide more flexibility to the investors and bridge the gap between mutual funds and PMS, we have introduced a new asset class, which is specialized investment fund. Let me state something about strengthening debt markets, which are generally, not being talked about. Our emphasis always has been on equity markets, but traditionally, in many markets abroad, debt markets are much larger than even equity markets. We do have a GSEC sector, the government bond market, but I'm talking of here the corporate bond market and the market which the SEBI regulates. Over a period of time, SEBI has taken several steps to strengthen the corporate bond market architecture. For instance, earlier issues of private placements were usually negotiated by the issuers directly with investors or through arrangers. The process was time-consuming and inefficient. Introduction of electronic book provider platform, which is EBP platform, addressed these issues and led to increased efficiency and better price discovery. In order to streamline the issuance process, improve transparency and liquidity in the corporate debt bond market, we have taken continuous measures. Recently, we have expanded the scope of EBP platform to include issuance by REITs and InvITs as well. Now the electronic book mechanism has been made mandatory for the debt issuances of 20 crore or above, which was earlier 50 crore. These measures would further streamline the debt issuance and broaden the overall debt market. The request for quote, which is RFQ, and online bond platform providers, OBPP, are facilitating improved price discovery and secondary market activity. These initiatives have made fixed income investments more accessible to institutional as well as retail investors. As a result, the total number of clients registered in the OBP segment have now increased from 3.5 lakh in FY24 to 5.6 lakh in FY25. Further, the value of trades in corporate bonds to RFQ platform has gone up by 55% to 5.3 lakh crore in FY25 from 3.4 lakh crore the previous year. Additionally, the Limited Purpose Clearing Corporation, which is LPCC, is gaining traction by enabling a robust framework for repo transactions in corporate bonds and ensuring better clearing and settlement mechanism. In March 2025, trade volumes of LPCC has increased to over 35,000 crore from modest beginning of rupees 480 crore in July 2023. Let me say something about municipal bonds as well. Municipal bond market is nascent but has a huge potential. India is undergoing rapid development and urbanization, leading to growing demand for robust urban infrastructure. The municipal bond market offers a viable means to urban local bodies to raise funds from the capital market. To create a more diversified capital market ecosystem and to strengthen urban infrastructure, we are encouraging capital raising through municipal bonds. Since 2017, municipalities across India have collectively raised about rupees 2,784 crore from 17 issues. These include bonds issuance by municipal corporations of cities like Indore, Pimpri, Ahmedabad, Vadodara and Rajkot in the last couple of years. Municipal bond market in India is still at a nascent stage, but holds immense potential for fundraising and broader participation by the market players. With the active participation, it can become a key source of financing for urban infrastructure. I'll speak something about technology now. The technology is playing a pivotal role in reshaping the capital markets. It enhances efficiency, reduces compliance cost, and improves investor experience. Market participants must proactively adopt technology-driven solutions to strengthen internal processes and risk management frameworks. On the regulatory front, technology is a powerful enabler in strengthening surveillance, enhancing supervisory effectiveness, and minimizing market misconduct. A future-ready capital market must be built on the foundation of innovation, transparency, and responsible use of technology. Today, we as a jurisdiction are recognized worldwide as a pioneer in adopting technology-driven market solutions and supervisory tools, we call them SupTech, setting benchmark for regulatory effectiveness globally. In securities market ecosystem, we are focusing on optimum regulation. We intend to simplify regulations, remove redundant provisions, and facilitate ease of compliance, while ensuring high market integrity and robust investor protection. To achieve these objectives, we need support from the industry as a trusted partner. As we look to the future, the path to Viksit Bharat will be shaped by our collective commitment to inclusive, transparent, and growth-oriented financial systems. The capital markets are not just enablers, they are integral to this transformation. I urge industry leaders present here today to continue building responsible enterprises, uphold the highest standards of governance, and actively contribute to deepening our markets. Together, let us work towards creating a capital market ecosystem that's not only globally competitive, but also aligned with the aspiration of a new India. A Viksit Bharat is within reach, and the security markets will play a defining role in making that vision a reality. Thank you. Jai Hind.
Thank you, Mr. Pandey, for that inspiring address. We look forward to your esteemed presence in the coming times also with us. To conclude the inaugural session, I now first introduce and then invite Ms. Aditi Mittal, Co-Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Director, AK Group. She is a chartered accountant with a vision to make corporate bond markets more vibrant and accessible. She has been driving strategy and expansion both in India and globally. May I now request Ms. Mittal to please deliver the closing remarks.
Namaste and good morning to all. After such a powerful speech, I'm still reminiscing that speech. So concluding remarks, I'm going to start by thanking Shri Tuhin Kanta Pandey ji, Chairman, Securities and Exchange Board of India, Shri Ashishkumar Chauhan ji, Managing Director and CEO, NSC Limited, Shri Sundararaman Ramamurthy ji, Managing Director and CEO, BSC Limited, Shri Manish Singhal ji, Secretary General, ASSOCHAM, Ms. Nipa, Chairperson, National Council on Corporate Bond Market, ASSOCHAM, and Founder Director, Trust Group, Shri K. Ravichandran ji, Executive Vice President and Chief Rating Officer, ICRA Rating Limited. Distinguished delegates, esteemed members of the media, officers of armed services, and friends. It's indeed a momentous occasion for all of us to witness the inauguration of the 16th Capital Market Conference under the theme Growth Catalyst of Viksit Bharat 2047 by none other than Mr. Tuhin Kanta Pandey ji, Chairperson, SEBI. Thank you, sir. Your inspiring words and presence have truly set the tone for the meaningful discussions that will follow today. On behalf of everyone gathered here today, I extend heartfelt thanks to all our distinguished speakers, both on and off the dais, for enriching this conference with your insight. As we collectively aspire to realize the vision of Viksit Bharat by 2047, which is really not too far, marking 100 years of India's independence, the capital market emerges as a cornerstone for this journey. It is not merely a financial mechanism, it is a powerful enabler for innovation, infrastructure, employment, and inclusive economic growth. India today stands at the confluence of opportunity and ambition. In an increasingly dynamic global financial landscape shaped by geopolitical shifts, supply chain realignments, and digital transformation, India has been recognized as a leading investment destination. Our inclusion in global indices and continued inflow of FDI underscores this confidence. Domestically, progressive initiatives like the production-linked incentive schemes, Startup India, and Make in India are creating a vibrant investment climate. These efforts are not just strengthening our financial ecosystem, but are laying the groundwork for long-term economic resilience. The capital market is also undergoing a technological revolution. Digitization, AI-driven analytics, robo-advisory, and blockchain are not just enhancing transparency and efficiency, they are also redefining the investor engagement. Regulatory innovations like SEBI's sandbox framework reflect a forward-looking approach that embraces the change while safeguarding the trust. However, even as we celebrate progress, we must remain cognizant of challenges. Market volatility, global uncertainties, and shifting interest rate environment demands robust risk management and regulatory agility. Equally important is our responsibility to deepen financial literacy, especially at the grassroots, and ensure robust investor protection framework. India has consistently demonstrated the ability to turn challenges into opportunities. From the economic reforms of 1991 to the resilient recovery post-COVID, that same spirit of innovation, inclusivity, and resilience must guide us as we build towards 2047 Viksit Bharat. In conclusion, the Indian capital market is more than just a financial arena. It's a mirror of our collective aspirations. To achieve the vision of Viksit Bharat 2047, our market must continue to evolve as inclusive, transparent, technology-driven, and globally competitive. And same can be witnessed with the progress that we are seeing and the support we are seeing from the MIIs and from the regulators. I also take this opportunity to sincerely thank our generous sponsors whose support has made this important conference possible. A special word of appreciation goes to ICRA Limited team for their valuable contribution in preparing the comprehensive knowledge report, which will serve as a key resource in addressing current challenges and shaping future strategies. With these words, I invite you all to join in extending a warm round of applause to our distinguished speakers and participants for their valuable presence and insight. Thank you and Jai Hind.